Welcome back. Let's get to some movers. A few minutes till the opening bell here. We're watching Alibaba. It's the top trending ticker on the Yahoo Finance platform. The share's down about 2.5% after Alibaba said Daniel Zhang will step down as CEO and chairman. He's set to only lead the company's cloud division as the e-commerce giant plans to split into those 6 business units. In a memo to staff, Zhang said the separation between the board and management team is necessary to turn Cloud Intelligence Group into an independent public company. Analysts estimated that cloud unit will be worth $41 to $60 billion, but said the data it oversees can make it a target for regulators at home and abroad. What's also interesting is that Joe Tsai, who is close to Jack Ma, the founder of the company, he is going to take on the chairman role. He's also the owner of the Brooklyn Nets and some other sports teams, by the way. So interesting that there is this sort of rejiggering, if you will, of the positions, especially given some of the tension that we had seen for a while, seemingly between Jack Ma and Chinese authorities and regulators. Now, one of his confidants taking on that chairman role here. We're still waiting for that split to happen. I should mention Eddie Wu, who is chairman of the Taobao and Tmall online commerce divisions. He is going to step in as a CEO here. And all of this as we are watching China very closely. Let's bring in back in Steve Sosnick of Interactive Brokers, chief strategist there. So a lot going on in China. Antony Blinken was just there and just ended up meeting with President Xi, which was not necessarily expected to happen, right? At the same time, you've got Chinese banks that are now feeding through stimulus into the system, but some people were hoping for a little more stimulus to be coming. So there's a lot to consider when it comes to China. And it seems like there's still a decent amount of trading enthusiasm around Chinese stocks.
Absolutely. A lot to unpack in that. Alibaba is always among the most actively traded stocks in our platform. For better or worse, it's used as sort of the proxy for China, or at least for active traders, as sort of one of the proxies for China. But in many ways, it's a tricky proxy because this shows you the heavy hand of the Chinese government, and so normally it's a great thing, not a great thing, but usually a good thing when companies that are conglomerates that have really big operating divisions break up into smaller units. You, in theory, unlock the value of each unit, and it should be additive. But interestingly, today, when the rubber hit the road, it was originally a positive, and then the stock fell overnight. And this is just, it's hard to unpack where the government's hand lies versus where the private market is. And so that's what makes it so tricky. As a net fan, I have to wonder whether this will affect the free agent market. Will Joe Tsai be spending money now? But then, you look at China overall, and it's been kind of a disappointment because I think we were really expecting this big snapback of China, being this, next, cylinder really coming to fore on the world economy, and it hasn't. And to some extent, they're almost like pushing on a string a little bit because the steps that they've made to reinvigorate the economy are tepid, and I think it's more defensive in many ways because I think there's still a lot of bad debt and bad real estate hanging out there, and I think they're trying to tread very, very carefully, which they're entitled to do what they're going to do. Certainly, they're not going to listen to me or realistically anybody else. But it's not. But from a market point of view, halfway around the world, it's a bit disappointing relative to the expectations. Think about how much enthusiasm there was about China reopening.
Yes.
And now it's just sort of, okay, they're open.